I made one amazing decision in my life. I chose my parents well. And they're both school teachers, and they taught me the value of education, and so I got a little bit of that. And I started working actually for IBM, back in those days when computers were still a relatively new and sexy industry. And I worked for them for about a year. And I have to say that I got out of that industry into the finance industry for entirely the wrong reasons. When I was at IBM, I was hanging out with a few guys who were starting to work in investment banking, and quite frankly, they were going out with prettier women and driving faster cars, and I just thought, that's what I want to do. So for entirely the wrong reasons, I got into this industry. And I stayed in it have stayed in it for a long time now, my working career. I started out working for an investment bank called Fay Richwhite. Has anyone ever heard of Fay Richwhite? That was the first buccaneering investment bank in New Zealand. It funded the first America's Cup challenges, and in fact built quite a few of the buildings around here, privatised telecom, did a whole lot of interesting stuff. And then I went overseas. I got married and went overseas with my wife, who was a diplomat, and we ended up in London, and I ended up working for Goldman Sachs for 10 years in London and New York and Hong Kong, and a marvellous time. And then I came back here and worked for them part-time and commuted. And I've kept that association in the sense that I still work with hedge funds that were my clients back then, and I sit on the board of 3 hedge funds that operate in Asia. So if you want to ask me any questions about that world and that life of aggressive investing and so on, very happy to do that. I then came back and retired for the first time, and I hated it. I got very bored. And so I then went and joined, first of all, a finance company, actually, one called Hanover Group? Yeah. I worked at Hanover Group for 9 months. I worked there, and on the second day I worked, how do I get out of this place as fast as possible? So it's a very bad decision made by me for the wrong reasons. Very happy to talk about that too. And then I ended up running Tower Investments, which was a big KiwiSaver provider, and managing about $5 billion, investing that in New Zealand and overseas. And then I retired the second time. I had what would you effectively call a midlife crisis. I was looking in the mirror and thinking, look, I'm making more money for myself, and I'm making more money for shareholders, but I'm not looking after my whānau. I'm not looking after the people where I came from. So I worked for charities for a year, and then I got together and I thought, look, I'm planting a lot of trees here. It's kind of cool. I'm helping out at Starship, but I'm not making a difference. So how can we make the biggest difference? So Simplicity, have any of you heard of Simplicity? Yeah? Simplicity started 2 years ago with 4 people in a pub with a blank sheet of paper saying, how do we make the biggest difference to New Zealand? And 2 years later, we're managing about $800 million now. We're the fastest growing KiwiSaver, and we do it in a non-profit model. We're in fact like the Southern Cross of KiwiSaver. We are a charity which runs a non-profit business, and so every day at the moment, we're saving people about $20,000 a day in fees, and we're giving about $1,000 a day to charity. And that's with 1% of the market, right? So it's a huge opportunity. The market will grow 4 times. I'm very happy to talk about KiwiSaver. And by the way, someone asked me a question about what KiwiSaver will do to the economy at some stage, because we're about to enter an economic renaissance like we've never seen. You are about to enter a prosperous New Zealand like you've never seen, and I can run you through that logic. So that's what I did. And now at Simplicity, we, interestingly enough, from helping run hedge funds and investing very aggressively in private equity and so on, we now run basically a passive investment strategy, passive index low fee. But I don't know if you heard yesterday, we just announced that we will be investing up to $100 million in New Zealand startup and high growth companies. And I can talk through why, on one hand, we invest very passively in low fee, and on the other hand, we're taking a very aggressive stance in terms of high growth companies in New Zealand. So that's who I am. I'm just going to spend a couple of minutes about my investment ethos and philosophy, and I can tell you that every single lesson I've learned the hard way. I have never made a decision and it's worked out right the first time. Pretty much everything has gone wrong at various stages. But my philosophy is actually pretty simple. It starts off with the word simple, actually. Fundamentally, the way that I think about money is that money is very, very simple. Our industry is designed to convince you that money is difficult and hard and complex. It is not. The basics about how to make money, invest money, save money are incredibly simple. And in fact, the more you simplify them, the more successful you will be. And that's because my second theory is that actually financial markets and making money is nothing other than human nature personified. So financial markets operate pretty much like the human being operates. And so if you make simple decisions, and the very important thing about that is that it responds basically to the environment around it. So you will make money if fundamentally as a human being you believe in what you're investing in and you believe in this product or this service or whatever. So very few people can sell you something which you fundamentally will not believe and fundamentally do not know is good over a long period of time. And the third thing is that because financial markets operate very much like, they are very much a byproduct of human beings, interestingly enough, their inefficiencies are human beings' inefficiencies as well. So, how many of you thought about what you would be doing in 5 years' time today? How many of you thought what you would be doing in 5 minutes today? Well, every one of you wanted to get a coffee, right? So, everyone thinks short term. And so one of the interesting things about making money, my third thing, is that we are, the great money is lost in short-termism and is made in long-term thinking. But it is incredibly difficult to do the latter, and it is incredibly easy to do the former. That is why most people do the former. That is why capital markets are very efficient short-term, but extremely inefficient long-term, because our combined intellectual horsepower does not think about the long-term, it thinks about the short-term. So just 3 simple principles. Money is incredibly simple, the principles are simple. Financial markets operate just like society operates, and we are trapped in short-termism and not long-term thinking. But I can talk about that more when we get to Q&A. I'm going to sound like a parent here, because this is what I would tell my kids. But I'd invest it in 2 things. One is education, more education. And the second thing is the most expensive house I could possibly afford. And the reason I say the former is because, and I think we all know this, right, that the differentiator is going to be how well educated you are and how good you are at your job. And it's a very, very competitive world out there. So you're just going to have to get good, get better, and be the best. That's how you make the most amount of money. In my 54 years on this earth, I have seen no correlation between lack of education and wealth. There's a little things called street smarts that you learn along the way, but fundamentally all the wealthy people I know, and there's a few, are all smart. So then the second thing is buy the most expensive house you can buy, and that's, I guess I'm not going to teach you anything here. You have a tax advantage when you invest in property. You have inherent leverage when you buy a property. In fact, you have the cheapest leverage you can possibly get. You have a fixed amount of land and a growing population, or an almost fixed amount of land and a growing population, and a growing wealth that applies itself to that land. So you have some incredibly long-term advantages in that, and most of my personal wealth has been made in property, and most of the people that I've met have made most of their money in property if they weren't running their own businesses. And that education is about running your own business, because the other 100K is do what you do well, invest it in your own business, invest it in yourself. I just happen to choose education, but it could be do what you do really well. We're a non-profit. We have 10 staff and 57 volunteers. And the reason we have those volunteers is because every single one of them wants to make New Zealand a better place. And what we have said to them is, look, with our fee differentiator, we will make the average New Zealander about $65,000 wealthier in retirement. And the government actuaries have verified that. I think that's a very well understood model that in the KiwiSaver and superannuation world, fees really matter. And the reason that they matter, and it's the reason that we focused on fees, is because it's the only thing you can control. I have no idea what capital markets and financial markets will do in the future. I will never know that, but I can control the cost of running our business. And in doing that, you save a lot of people. So save a lot of money for people. So if you think about making a difference, $65,000 per person, if we have 100,000 clients, that's $6.5 billion. Now, I can't plant $6.5 billion worth of trees. I can't change that many nappies in Starship or whatever. So $6.5 billion, and that would be money that would otherwise pretty much go to the Australian banks in a form of profit and go over to Australia. So Stephen has come on board, because he wants New Zealand. Anyone know Stephen Tyndall? Yeah? So Stephen has come on board as the patron of our charitable trust and has lent us some money at a crazily low interest rate to fund growth in the business. And he's done that because he believes that he wants New Zealanders to be wealthier, and he believes this is a scale game, because not only will we be involved in KiwiSaver and investment funds, but eventually we'll get into insurance, mortgages. Everyone know Jeff Bezos from Amazon? He has this great line. He says, "Your margin is my opportunity," right? And when you look around the financial services business, the fat margins are everywhere. So there's heaps of opportunity if you want to disrupt. So he's come on board for that reason. And just today, we announced investing with him and with First NZ Capital in Icehouse. Anyone heard of Icehouse? Yeah? It's a commercial arm of Icehouse Ventures. We're going to cobble together all of their commercial businesses, stick it into one company, recapitalise it, and make it so that it will be able to take not startups, because there's plenty of money for startups in New Zealand, but startups that have succeeded in their first or second or third year and then need their next whack of money to grow quickly or to go overseas. Classic example might be Rocket Lab. You know, Peter got all of his money domestically initially, and then he needed to go overseas because there were no New Zealanders who could write out a big enough check. So we at Simplicity have said we're going to commit $100 million to this space over the next 5 years, and we will be investing in that next round. Now, why are we doing that? It goes back to what I talked about basically, I guess it's sort of education and running your own business. The other thing is, think about the nature of your money and what your competitive advantage is. We have a competitive advantage on behalf of our clients because we can think very long term, and investing in private equity and venture capital is a very long term game. You must be very patient. And secondly, we have the size, we have the potential amounts to invest that we can invest and take what is effectively an indexing strategy to the sector. We want to own a little bit of every one of these companies that succeeds in their second or third year, because quite frankly, we don't know which ones will win, right? Who would have believed that New Zealand would be launching rockets from the Mahia Peninsula and, right, and be the only country in the world with a non-government funded space program? Sorry? Yeah, indeed. Yeah, but you had to be invested in that to win, and you wouldn't have known that. So the nature of our money is it's large check size. Most people cannot afford to write out that amount of money in New Zealand, which means we have a competitive advantage in the terms and conditions we will get. It would also allow us to be co-investing with the biggest and the smartest venture capital operators in the world, who normally will come down and invest in these companies. We want their brains, we want their horsepower, we want their marketing advantage to get these companies to accelerate and grow as fast as they can. We want our KiwiSaver members to benefit. And because our members are investing for 30 years on average with us, we can afford to wait 10, 15, 20 years to win. We have a competitive advantage is, in finance terms, we call it long duration money. We have a very long-term view, very large check sizes in a market that is starved of capital. So we have a competitive advantage, and which is what Stephen Tyndall and First NZ think as well. Does anyone trade stocks? Day trade? Oh, you can put up your hand with pride here. I've done it before. Okay. I think you can win in doing that, but you have to have a competitive advantage. And if you don't have a competitive advantage, then markets are very efficient. I talked about markets being a reflection of society. We're very efficient about how we carry about our daily lives, and markets are very efficient about how they allocate capital. It is extremely difficult to beat the market, particularly when you take into account the cost of running your business. You know what, Warren Buffett. Everyone all heard of Warren Buffett, right? You know, does anyone know what Warren Buffett's philosophy is on this, on trading? Invest in S&P 500 index. Yeah, index fund. What he says is he doesn't have a competitive advantage. He says, listen, he doesn't have a computer on his desk. He says, I don't know what these companies will do day by day, but I can look out to their sustainable competitive advantages in 10, 20 or 30 years' time, and I'll buy those shares and I'll be patient and I'll wait. So that long-term perspective has validity if you bring to the markets his particular intelligence. And even the hedge funds that I still work with in Asia, their average holding period is 2 to 3 years. They don't believe that they have any short-term competitive advantage. And I'll give you an example of who you're competing against when particularly you're day trading. I used to run the derivatives business for Goldman Sachs in Asia. I helped run it. And the Korean futures market would be an example. The Korean futures market trades $100 billion a day of turnover. And that's not even the derivatives on it. There's a whole series of derivatives which run into the trillions of dollars a day in turnover. And in order to compete in that market, we had 8 Russian PhDs, astrophysicists sitting in Moscow, who were writing algorithms which they would then send over to us day by day. And we had a computer, and we paid well over $1 million a year to have the computer sitting 15 feet closer than the next investment bank's computer because the speed of light was too slow. We wanted to get our trades into the Korean Stock Exchange faster. And then, on top of that, we had a savant. I had a guy sitting in front of a screen who had memorized every baseball pitch and every baseball hit in the entire US history of baseball ever. So I could get a book saying in 1957, the Blue Jays in the 7th innings, he could tell you that. He had that sort of memory. He's a savant. And he used to sit there at the screen and watch the trades coming through, and then he would hit a button about 6 times a day. He was the highest paid person at Goldman, 6 times a day. So you had astrophysicists, highest technology, savant, and you know who we were betting against? Korean housewives, who were waking up in the morning and decided that day trading was a good idea. We were making all of our money from Korea. I mean, how can you be competitive in that advantage? And financial markets like that are getting increasingly competitive all the time. I don't know what the percentage of trading is done now via algorithms and computers, but it is massive. Have you actually read that Michael Lewis book? No, it's the one about the cable that they laid between Chicago and New York. Flash Boys. If you get a chance to read Flash Boys, that will give you a very good idea of how hard it is to compete as an individual in the markets. But you do have one massive advantage. You do have perspective and patience. And if you can use that, which is how Warren Buffett makes his money, how most people make their money, if they're trading in financial markets, you can use that because everything we were doing and everything most people do in financial markets is very short-term thinking, very, very short holding periods, trying to second guess on short-term trends. So what we decided to do is when we set up, here's an example of how you can't control the markets. When we set up and launched Simplicity, within about a week, there was an article in the Herald talking about KiwiSaver funds investing in nuclear weapons. Do you remember it? It was a big expose. And we looked around and we were working with our partners, Vanguard, the second biggest asset manager in the world, $7 trillion. They own 2% of every company in New Zealand, 7% of every company in the United States, 5% of every company in Europe. We turned around and went, oh shit, we're invested in these things too, right? So, in fact, pretty much every KiwiSaver fund was. So we went to Vanguard and said, look, you have got to get rid of nuclear weapons. And by the way, if you're going to get rid of them, could you please get rid of tobacco and cluster munitions as well? And so they said yes. In fact, it was a very interesting conversation I had with them because I said, you will never be relevant in New Zealand. And this is a KiwiSaver market that will grow to $300 billion. You'll never be able to sell a product here unless you bring out these products. So they did. Second biggest asset manager in the world really quickly bought out these funds. At that point, though, we said, you know what, this isn't going to stop because there is an intergenerational trend. Young people now do not want their money invested in bad shit, right? So let's begin a project at that point, and we spent 6 months analysing which sectors have performed and underperformed globally in investment. And here's a really fascinating thing. If you remove fossil fuels, tobacco, nuclear weapons, in fact, all weapons, pornography, gambling and gaming, you actually outperform all the other sectors combined by something between 0.5% and 1.5% a year, depending on the asset mix you have. So all these sin stocks, which when I grew up were fantastic investments. If you wanted to make money, you bought booze and fags. That's what my parents and grandparents would have done. Now they underperform. And why is that? You know that theme I talked about, how financial markets operate like human beings? Well, it turns out that those are now all sunset industries. And here's why. Have a guess at what percentage of 18 to 30-year-olds in New Zealand don't drink. Anyone guess? 5%? 30%. 3 out of 10 young adults don't drink, no alcohol. So alcohol is now underperforming as a sector because consumer-wise, human beings, we are deciding that this is bad for us. Tobacco is another example. Getting taxed to oblivion. Fossil fuel extraction is fascinating. Most of the oil companies in the world are sitting on these lakes of oil, valued at something, right? They attribute $1 per barrel of oil in the ground. But the problem is that what we would call a stranded asset? Will it ever get out of the ground? Will it ever actually realise that value? Will it ever be sold? And so the financial markets are waking up now and realising, you know, oil companies are a really bad business because we have no idea if this stuff is ever coming out of the ground. And so what we did, so when we did this work, of course we wanted to invest ethically, but I was fearful of getting into the situation where I thought, if we invest ethically, our investors will make lower returns. Because as an asset manager, my fiduciary responsibility to you is to make you as wealthy as you can be in retirement without doing bad stuff, right? It turned out that actually eliminating these things was a really good thing to do. And so it's a complete win. So I do not understand why our competitors do not go all the way down this train really quickly, because the data proves it. And in fact, Vanguard, it's interesting, the process for Vanguard, as I said, second biggest asset manager in the world, they've had a real wake me up now. They've had a renaissance in the way they think. And by the way, and also our ethical investing doesn't just extend to that. That's called negative screening. The other one is positive engagement. I spend a lot of my time talking to the boards of the biggest companies in New Zealand about our role as a KiwiSaver and shareholder. And here's how my conversation goes. It goes something like this. We're going to own about 10% of your company in 10 years' time. So you might want to take us seriously. And here's what I'm saying to you as a serious long-term stakeholder. I want you to concentrate on three things in the way you run your money. First of all is I want you to take more risk. I don't want to get dividends from you. I want your company to grow. I want you to invest in growth, because and I'll tell you about that in a minute. The second thing is I want you to be very focused on diversity in your workforce, because a great company has only got three things. Only three things make a great company: an idea, money, and people. Ideas are everywhere, folks. You've got every idea in the world on your smartphone. There are no new ideas. Well, there are in raw science, but there's no other new ideas. Simplicity doesn't have a single new idea. We're just taking what's worked elsewhere in the world and doing it here. Secondly is money. There's heaps of money. For a startup, there's plenty of money, and as I'll talk in a minute, we are going to be awash in money in New Zealand in the next 10 years' time. But the third one, the hardest one, is always people. And so if you think you have a competitive advantage and you are not drawing from the deepest and widest well of talent, you're crazy. So, you know, diversity is not just a feel-good left-wing socialist, you know. It's absolutely economic sense. You're crazy if you don't focus on that. And the third one is sustainability. And sustainability is a word with many different definitions. But sustainability from our point of view means I want you to think about running your company in 30 years' time, because we're going to be invested in you for 30 years. So start thinking about all of these things that you know your consumers and your employees and your stakeholders really care about how your business will survive long term. That may be environmental sustainability, that may be financial sustainability, but start thinking longer term and not about just making the shortest profit now to pay me the biggest dividend, because I don't want it. I want longest term wealth creation. If you pay me a dividend, I've got to find somewhere else to put it, but I've already decided to invest in your company. So I just want more of you, please. I want you to apply that money and your particular talent to creating more wealth. That's actually in its simplest form. I'll just talk about New Zealand for a second, because you are entering the most exciting time in history, to my mind, and here's why. Anyone here been to Singapore? Yeah? Do they have better roads? Better infrastructure? Anyone been to Brisbane? Do they have taller buildings? Better roads? Sewers? I'll tell you this interesting thing about Singapore, Brisbane, and New Zealand. We're all about the same size. Population-wise, we're not far. Brisbane's about the same size as Auckland. Singapore's about the same size as New Zealand. Why are they so much wealthier? Well, let's look at Australia as an example. People say Australia's a resource economy, got lots of iron ore on the ground. No, that's not why they're rich. You know, Nauru used to be rich with a whole lot of fertiliser there as well, a whole lot of bird poo. Why is Nauru poor and Australia wealthy? They're both commodity countries. If you thought that Australia was wealthy because of the iron ore, you would have expected the economy to go up and down like a third world commodity country, right? But why has Australia been recession-proof for 26 years? No recession. Why does Singapore have, is it the highest GDP per capita in the world? It's not far off. There'll be a few oil-producing countries, but it's way up there. It's because what they have done is they have obliged their citizens to save, and they have reinvested those savings back into the economy. And any economists here? Yeah. If there was an economist here, they would tell you that the multiplier effect of $1 of domestic capital is twice that than if it's borrowed overseas. You generate more wealth from domestic because it sticks around, and it tends to stick in longer duration assets. So here's what's happening in New Zealand. The history of New Zealand has been a number 8 wire economy. We had in the 1890s, the British came in and invested a whole lot of money, tidal wave of money, and then it left again. And then the Americans came in the 1960s, tidal wave of money, and it left again. And then in the 80s, it was the Japanese, right? And now who is it? The Chinese. Tidal waves of money coming and buying all these assets. And it feels good at the time, but then when the money leaves like a tidal wave, it tends to leave quite a bit of destruction. But what is happening now is a very, very different economy. And we call it the Singapore moment, because this is what happened to Singapore in the 1960s and Australia in the 1980s. And the answer here is KiwiSaver. Now, you're going to say, here's this guy, KiwiSaver manager, talking about what KiwiSaver is doing. Let me give you some numbers. It's really simple. KiwiSaver now has $50 billion. The Treasury tells us that by 2030 it will have $200 billion. That is a net gain of $150 billion. We know that about 50% of that money gets invested in New Zealand. So in the next 10 years, $75 billion. 75, and that is, remember, that is long-term investment capital. It's pure gold. And that is about 2.7% of GDP. So let me put it another way. If I told you that tomorrow a plane was arriving with 10 billionaires, each of whom had committed to invest $7.5 billion in New Zealand in the next 10 years, do you think the Prime Minister would be at the bottom of the stairs greeting them? Do you think there'd be a red carpet? Yeah, but that is exactly what's going to happen. But the difference is this is not a tidal wave of money, it is a rising tide of money. So every single day now, KiwiSaver managers like myself invest $10 million of net new money, your savings that have otherwise would have gone into paying off mortgages, by the way. So it helps suppress the housing market. It just comes in tick, 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 tick. And like a rising tide, you don't notice it. You just go about your average day and just things seem to be okay. Surprising that the economy hasn't slowed down as much as the overseas. Surprising that house prices are still pretty resilient. Oh, look at all those cranes on the horizon. Aren't they unusual? All of that has its roots in KiwiSaver investments. We've already seen the effect of the first 25 billion. We're about to see the effect of the next 75 billion in the next 10 years. And here's the other thing about that money. It is all long duration, long investment money. It will build the roads, the sewers, the electricity networks, the public transport, just like it did in Singapore and just like it does in Brisbane. That's why roads in Brisbane are so much better than they are in Auckland. That's why Singapore manages to have an underground subway at huge expense, all built with domestic savings. So it's very long duration. And here's the other wonderful thing about that money. It's ours. We're investing in our own community. It is completely depoliticised. There is not a single asset that the government could not sell to KiwiSaver funds without the public going, hooray. But if they sell it to offshore people, we don't like it. But they'll be selling it back to us, right? So it is massive ticket. It is long duration. It is completely domestic money, and it is arriving just like a rising tide. That's why I'm incredibly excited that you're sort of starting or in the middle of your careers right now. You could not be. You timed it perfectly. You want to talk about making money, and the best investment you made was you were born when you were, because New Zealand is about to go through that. And we're already seeing it. Have you heard of the Crane Index? Yeah? Does someone want to describe what the Crane Index is? How many cranes on the horizon? Do you think there are more cranes in Auckland at the moment or New York City? Chicago, Shanghai, Beijing, Singapore, Hong Kong, Auckland, number one. More cranes here. Why is that? Well, people often use that as a sign of the markets are frothy and they're boiling over and going crazy. No. That's what happens when economies go through this structural change to domestic money funding those businesses. I know this because I used to fund those cranes when I worked in a finance company. We used to build skyscrapers. As soon as the market turned down, the bank's credit got cut off, the project stopped, people lost their jobs, it was chaos. Now if that happens, it's KiwiSaver money. The jobs keep going, the building keeps on getting built because the money's arriving every day. So it creates a much smoother economic growth. You don't get the ups and downs. Which political party brought it in? Labour. Yeah. Michael Cullen.
You walk out of a hedge fund meeting and into a supermarket meeting.
Yep.
How the conversations or the questions are the same or different?
Sure. There's no one in any hedge fund that I've ever met. I used to, one of my jobs, I had the coolest job in the world there for a while. I used to go and pick investment talent and set up hedge funds around them in Asia. But not a single one of those people would actually tell you that the markets were anything other than brutally efficient, incredibly efficient. What they were always looking for was their differentiating factor, what made them different and better from the market. And it didn't tend to be because they were looking at the news or reading stockbrokers' reports or somehow having an insight. They were doing things like, I'll give you an example. One of the hedge funds I work for in Hong Kong pays medical specialists to tell them what products they're increasingly using. These are surgeons. So if a new surgical procedure comes out that involves a new drug, or they pay them to say, this is what we're now using, this is hot, then they go back and, so they try and get a competitive advantage that way. Simplicity, we believe in scale, and so we pass all the benefits of scale down. So everyone pays the same fee. So the more scale we get, the fees just come on down in unison. And after 2 years now, we're the second best performing asset manager in investment funds and KiwiSaver. And why is that? There's no magic, folks. We're just cutting our fees. The most important thing is fees. A tin of baked beans costs less in Pack and Save than it does at Countdown. We're the Pack and Save because actually the returns from the markets are just a tin of baked beans. There's really nothing that particularly fancy about them. You might want to go to the gourmet section of the supermarket. We don't do the gourmet section. Right, but the vast majority of money and the vast majority of the characteristics of the financial markets are baked beans, which is why baked beans are the biggest sellers in supermarkets because more people eat baked beans, right? So there's that human market link there as well in a weird way. And if you're a small business owner, I don't think you'll hear any other KiwiSaver manager tell you this, but don't invest in KiwiSaver. Invest it in your business. You must put $1,042 into your KiwiSaver every year so that you get the government, the $521 from the government. That is the only free money I have ever seen, ever. It is free money. If you can believe that over $300 million of it every year doesn't get claimed, it's unbelievable. In fact, I wonder if there's a business by going out to people who are saying, anyway. The only mitigating circumstance against that is you should absolutely invest in your own business and yourself. That's the best investment you'll ever make. But there may come a time at which you're over-investing and over-capitalising your business and yourself. When you get into a mindset where you think, it's always better in my business, maybe it's not. Maybe then there's a call for diversification. Even then I would ask, maybe you want to buy one of your competitors and spend the money that way. But, it's different. But KiwiSaver is not right for everybody, absolutely not. And remember, it's locked up to your 65 too. So you may want to put it into funds where you can get access to it more readily. But be under no illusions, folks. It's not. I'm in the passive index low fee business. And I'm not doing this for money. Not any money. And I'm running it this way because I do know that over the long term, the odds are heavily stacked in your favour if your fees are lowest. It's the single biggest differentiator. Here's a really simple way of explaining it to you, by the way. People say 1% fees. It doesn't sound very much, right? Imagine if you owned a $1 million house. Imagine if your rates bill was 1%. It's $10,000 a year. We'd be rioting in the streets if our rates bills were $10,000 a year. Here's another way of putting it. 1%. If the average KiwiSaver fund will make about 5.5% over 30 years. Statistically, that's the odds of it. So that means that if you're making 5.5% and you're being charged 1%, you're paying almost 20% of your returns and fees. Do you guys know what your lifetime average KiwiSaver fees will be? Okay, well, let me give you an example. Your mobile phone's going to cost you about $33,000. Anyone know what power will cost you? About $34,000. That's what you'll spend in your lifetime. The average New Zealander spends. You know what KiwiSaver fees are? $54,000. $54,000. This is from the government actuaries, not my number. It's a statistical fact, and that's what 1% is on an ever-growing pile of money. That's for the average New Zealander. Many will pay way more. So that's why we're in this business. Make the biggest possible difference, go to the biggest possible sandpit of money, save the most money. New Zealanders end up better off. Oh, we charge about 1/3 of the average fees. So the average fee is about 1.2, 1.3%. Ours is about 0.3, 0.4 on average year. And it's going down, by the way. So my goal is to charge you a flat $30, no matter how much money you have saved. That means we will be, and when we have 200,000 members, we're about 23,000 now. When we have 200,000 members, I think we'll be able to charge you $30. That means fees in our industry, we're going to bring down KiwiSaver fees by about 95%. I may not be alive by then. I think the banks are getting a contract out on me pretty soon. So, look, I have to say, the People's Action Party, right, played pretty much the perfect hand in terms of economic growth. There are other things you can say about Singapore that people may not like, but economically they played an almost perfect hand. Will that happen in New Zealand? It's a very valid question. The answer is I don't think quite to that extent, because they had a perfect confluence of events. But boy, we have some really good stuff happening now, right? We have this infrastructure commission the government's setting up. If that gets the suppliers of capital like ourselves and the demand, the people who want to build the roads, the sewers, the power grids together, some really amazing magic could happen, and we could see a whole new wave of infrastructure. And all of you running small businesses out there will massively advantage from that, having that infrastructure. So it could work really well. You pay almost no tax. We have a pretty reasonable tax environment here, pretty simple. And so, you know, I'm extremely optimistic about it, but maybe not quite as much as Singapore, but certainly as well as Australia. No question. I mean, in fact, better than Australia. Look, I have some targets in mind that in terms of how much money I'd like to make New Zealanders wealthy, and there's the charitable thing is a big thing for us as well, because we do think that by 2030, with our current growth rates, we'll be giving away about $10 million a year. So we want to be one of the biggest charities in the country as well. After that, look, I'm useless. I'm going sailing. I would way past my use-by date. So if any of you want to run Simplicity in a few years' time, let me know. And the domestic stuff, we just run on you heard of Bloomberg? We've got a Bloomberg terminal. One guy spends about half an hour a month investing the money domestically, just pushes a few buttons. And the money was all held by the public trust, so we never touch it. A government-owned entity looks after all your money. I'm never allowed to touch a cent of it. We just give advice on how it's managed, basically, and provide you with the fancy screens and the front ends and the call centre and all that sort of thing. But the actual managing and holding of your money no, we would never touch that. Well, New Zealand has a very real decision. We could be Norway or Nauru. Choose. We have to choose, because the money's arriving either way. And so how it becomes Norway is probably as well, hopefully, if the money arrives, the supply will come too. So if you look at the construction sector, there's some encouraging things, the noises the government are making now about the construction accord. I think there's going to be some very large-scale operators arriving in New Zealand, particularly from China, but also from places like Korea, that will build the next round of infrastructure, because we're just not qualified to build tunnels and all that sort of. Well, we sort of are, but it's, you know, underwater tunnels. I'll trust the Chinese on that. I think it'll happen. We have a sensible democratic process here. And we have a very uncorrupt society. So I think we will actually deploy that money really well. And trust me, and people like ourselves, we're going to be absolutely paranoid about how this stuff gets done, right? So we'll be, as a supplier, we're going to, you know, your retirement is in my hands. I'll make damn sure that money's spent sensibly, yeah. So thank you very much, folks. I sometimes stand up with these things and feel like I've just talked at you rather than with you, but I'll hang around for a while if you'd like to know anything. And listen, if you'd really like to know anything, just give me, this is New Zealand, huh? Just send me an email, sam.stubbs@simplicity.kiwi, and have a look at our website. It takes 2 minutes to switch. And if you don't want to, that's totally cool. And if you do, thank you very much. And yeah, send me an email. And if you want me to come and have a chat, I don't really do anything useful other than stand up and talk. But if you'd like me to come and talk to other groups or whatever, just let me know.